Hey everyone, I wanted to start this show just reminding you how appreciative I am that you watch these videos. I really hope that you're liking them. Just thank you so much. I wanted to bring up one thing that I addressed on my Tesla Q4 preview video, and I hadn't heard a lot of people discussing it, but it had to do with my feeling that there is one or more or even several large institutional buyers that are accumulating or are in the accumulation phase when it comes to buying Tesla stock. And this proved out again today. We had the S&P down 1.77% and Tesla was up 1.74%, which you probably know if you're watching this video. As far as I know, I think this is the only channel that has released its own model. And I'm going to release an update to that model again on my Twitter, IFTF6. And you can check it out. I have updated my numbers. So we were previously at 1061 for 2020, and I have moved that number up to 1102. You can see why, and I'll talk a little bit about it at the end of the video. I also dug a little bit more into 2021, which I think is really important to discuss at this point, because in roughly 6 to 9 months, the Wall Street analysts will start to adjust their price targets to look 1 year out, and they'll move into 2021. So even though 2020 just got started, and I think there are some big, in my opinion, numbers in store for 2021, 15 to potentially as high as $19 a share. And I'll get into what that means for the stock. A couple of other things. I know that some of you commented saying that you didn't like the change to the channel name, and I hear you. It's just a placeholder. I think it's also important just to keep in mind, given the run that we've had in the stock, that the stock market is risky and that stocks can be affected by extraneous factors that have nothing to do with the underlying performance of the company. So I just want everybody to keep in mind that as we pace through the quarters in 2020, that there will be lumpiness with the numbers, which has to do with seasonality and maybe factors outside of Tesla's control, things like the coronavirus and others. So if you are long-term focused in nature, I think you'll be fine. And I just want everybody to be mindful of the risks as we talk about all of the great things that happened on Q4. A couple of quick news items. Third Row came out with their part 2 of Elon's story, and I'll leave a link to that in the description. You should listen to it. Also, apparently Elon Musk was cruising around in the Cybertruck today or sometime this week with Jay Leno. There was a little video of it. I'm not playing the sound, but they were spotted out filming for Jay Leno's show, so that's pretty cool and good to see the Cybertruck on the road.
There's one car company, at least this week, is not in trouble. That's
right.
Tesla,
yes.
that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast, and the numbers have gone up dramatically. Today, the stock is roughly $640, up from $580 yesterday.
So this literally just came out, and basically they've taken their price target up to $7,000. The bear case $1,500, and the bull $15,000, which has a nice ring to it. The expected value is up from $6,000, and I will go through this. One thing I do agree with them on, I do agree with Ark on, is the potential profitability around robotaxis. I've been focused on that for a long time, but let's cover that later. There's a lot more to get to. So one thing from the call that I actually didn't hear them talk as much about was robotaxi, and I know that they discussed feature complete and the idea that this would be out maybe within the next couple of months, and I think that that is really exciting news. I think what surprised Wall Street more, and I was shocked by this because if you've been listening to what Elon and the company has been saying for months and months and months, then you knew that Tesla would be delivering in excess of 500,000 vehicles in 2020, or at least there was a very good chance that they would be able to do that. And they guided to vehicle deliveries which should comfortably exceed 500,000 units, and that also production will outpace deliveries this year. So their capacity has increased significantly. The demand is strong. They believe their other businesses, solar and storage, should grow at least 50% in 2020, and Wall Street is still playing catch up, so it's crazy. Just one note about my earlier model. If you looked at the first version, I was using an EBITDA figure which included the expense of stock-based compensation. For the first time in this quarter, Tesla has come out and they have excluded stock-based compensation from their adjusted EBITDA figure. And so if you're going through the financials and you see that change, you'll see that the EBITDA figures have now been readjusted higher because they're adding back that stock compensation expense. And in my new model, I have added a line item which adds that back. There's some debate in the accounting community as to how you should treat stock-based comp, but basically it is a non-cash expense. So if you want to see the underlying profitability of Tesla and understand how their margins are performing as they ramp production, I do agree with them that it's appropriate to look at their earnings on sort of a cash basis and exclude that stock comp from the performance of the business. Doesn't mean that shareholders don't have to pay stock-based comp to the employees. It is dilutive, but again, it I think helps you get a better lens into the underlying profitability of the business. And finally, I don't think we can discuss the new news without the latest release from Emoji Records. Don't doubt your vibe. So I guess Elon is now in the electronic music business if he weren't in enough businesses already. And he's got the Cybertruck on what looks like Mars. It's good to see him celebrate a little bit. I'm considering doing a 24-hour challenge where I listen to this song for 24 hours straight just to promote Elon and have some fun with this. I'm not sure if anybody would actually care about it, so leave me a comment below. Let me know if you want to see that or not, and if it gets enough traction, I might do it. It's just for fun. So let's talk about my model very quickly. I don't want to spend a lot of time going through numbers, but I just want to draw your attention to the capacity ramp that Tesla has experienced since the third quarter of 2019. So in the third quarter, their capacity was around 590,000 vehicles. And by mid-2020, according to the release, Tesla is telling us that their capacity will be at 740,000 vehicles, which includes Shanghai and the Model Y from Fremont as well. And so all of this is to say that my $11 estimate, it sounds crazy to say, but it could be conservative for 2020 because my production and deliveries assumption is only 625,000. Now that's a good deal above 500,000, of course, but it's also below what their Q4 2019 capacity is. And even if they only reach this 740,000 capacity by the middle of 2020, this is still a conservative number. And you can take a look again at my model if you'd like to see how I'm calculating things. As I move into 2021, my initial guess is, and these are my personal views, my initial guess is EPS of anywhere from $15 to $19. I am going to wait until I compare these numbers to consensus for a couple of more days because there are still estimates that are rolling through. Not everybody's updated right now. So I think what consensus represents right now is sort of a mix between analysts who haven't updated their numbers yet and analysts who have. So I don't want to give you a faulty consensus and kind of build our conversation off of a number that isn't right. It is absolutely essential and vital to note that these numbers do not include Cybertruck, do not include Semi, do not include Robotaxi. And I've selected PE multiples, it's kind of illustrative price to earnings multiples between 30 and 60 times. Let me show you why. So I ran a quick stock screen for large companies in the US whose market cap exceeds $5 billion and whose EPS growth estimate for the current fiscal year is between 30 and 150%. The reason why I cut things off at 150 is there are probably some companies that are growing from like 1 to 3 pennies, and I just don't want those weird numbers to throw off this analysis. But here's the point. I think Facebook is a decent comparable. So Facebook is growing at 44% with a PE of 22 to 23. Netflix is growing at 44% with a PE of 58. So if we look at Tesla, and I'm anywhere close to right, EPS, first of all, gets to $11 in 2020, which is a big if, and it's way above consensus right now. But if EPS gets to 11 and then nearly doubles all the way to 19, we're going to be looking at growth of 74%. Obviously, there's a huge number of unknowable assumptions that I've made here. So go into the model or look at other sources and develop your own view. But 74% growth, even if that's wrong, and let's say we get 50% earnings growth, to put 30 to 60 times, given where companies like Netflix and Facebook are, is not crazy at all. And so on my number of 19, That gets you on the very low end 577 and on the high end 1153. Obviously below Ark's price target, and obviously does not include my value of up to $800 for the robotaxi. So every time we talk about Tesla stock, I try to do my analysis slightly differently, just so you can see what I try to do, which is I try to triangulate into the value of a stock from multiple different perspectives over multiple time periods. And that way you can see if something really, really stands out to you, either positive or negative, and kind of adjust your thinking based on that. But again, every time I rerun the numbers in the future, I get crazy big stock prices. And I'm really just using the quarters to ask myself, like I think most of you are, is the company on track or are they not? And they are very much on track. So the fourth quarter was very, very encouraging. And there were lots of videos that went over the details. We did about a 3-hour live stream on this channel covering the release. I did my Q4 preview video, which if you would like to go back and see what I was thinking going into the quarter, I think that video will be interesting for you to watch if you haven't seen it yet. Also, one more thing for the people who have stuck around. If there's a stock you would like me to cover, just leave that ticker in the comment section below. And if you see that ticker already, just give it a thumbs up. And next week, whichever stock has the most thumbs up, I will do an analysis on, and it doesn't matter what it is. And by the way, if there's only one person listening right now, you can comment on the stock and give yourself a thumbs up or get your friend to give it a thumbs up. And even if the ticker only has one thumbs up, I will do it. It doesn't matter what it is. So literally anything. If you want to see me do an analysis on that stock, just comment below. And as always, thanks again and see you soon.